Imagine waking up, grabbing your phone, opening your banking app, seeing a number 40% lower than last night. Not because of a hacker or fraud, but because your government decided your money was worth less. Overnight sounds like a dystopian nightmare, right? Well, it's happened before. It's multiple times. In 2013, the people of Cyprus experienced exactly this. They went to sleep and woke up significantly poorer. The banks didn't just limit withdrawals. They took money directly from people's accounts in what was called a bail-in. Today, we're diving deep into one of the most terrifying topics in modern finance, the currency reset. We'll uncover what it means, if your money is truly safe, and what history tells us about the future of global currencies. Every 70 to 80 years, the financial system tends to reset itself. And if you look at the calendar, we might be right on schedule. Let me start with a question that might make you a little uncomfortable. When you check your bank account and see, say, $10,000, what are you actually looking at? Most people think they're looking at their money, safely tucked away in a vault somewhere with their name on it. But here's the reality, the one banks don't exactly shout about in their glossy brochures. That money, it's not really there. When you deposit cash into a bank, you're not storing it like you would jewelry in a safe deposit box. You're actually lending it to the bank. In return, the bank gives you an IOU, that number on your screen. It's a promise. A digital promise that says, hey, we owe you this much. Now, under normal circumstances, this system works just fine. You can withdraw your money, transfer it, spend it, no problem. But the key words there are normal circumstances. Because banks don't keep all your money in reserve. They can't. If they did, they couldn't make any profit. Instead, they use what's called fractional reserve banking. This means they only keep a fraction, usually around 10% of all deposits actually on hand. The rest, they loan it out. They invest it. They use it to make more money for themselves. Think about that for a second. If every single customer of a bank walked in tomorrow and said, I want all my money back, right now, the bank would collapse. They literally don't have it. This isn't a conspiracy theory. It's how the entire system is designed. And this brings us to an even darker question. If a bank doesn't have your money, and that bank gets into serious trouble, who actually owns what's in your account? The answer might surprise you. Most countries, including the United States. The moment you deposit money, you legally become an unsecured creditor. That's fancy legal language for saying you're at the back of the line. If the bank fails, secured creditors get paid first, then bondholders, then shareholders. And then, only if there's anything left, you might get your money back. But wait, you're probably thinking, what about the FDIC? Doesn't that insurance protect us? Yes, in the US, the Federal Deposit Insurance Corporation insures deposits up to $250,000. That's great if you have less than that. But here's the catch. The FDIC has about $128 billion in its fund. Sounds like a lot, right? But American banks hold over $18 trillion in deposits. Do the math. If multiple large banks failed at the same time, the FDIC couldn't possibly cover everyone. They'd have to get a massive bailout from the government, which likely means printing more money. This isn't just some wild theory. Currency resets are woven throughout human history, like a recurring nightmare. Let's travel back to 1933. The Great Depression is tearing America apart. Banks are failing. People are desperate. And then President Franklin D. Roosevelt does something extraordinary. He issues Executive Order 6102, making it illegal for American citizens to own gold. That's right, illegal. Citizens were forced to turn in their gold coins. Bars and certificates to the government for about $20 per ounce. If you refused, you could face 10 years in prison and a massive fine. But here's where it gets really interesting. After the government collected all that gold, it changed the price. Overnight, gold was revalued to $35 an ounce. That's a nearly 70% increase. The government essentially confiscated wealth from its citizens and transferred it directly to its own balance sheet. Was this theft? The government called it necessary economic policy. The people who lost their purchasing power probably had a different word for it. Then, fast forward to 1971, President Richard Nixon ends the system that made the US dollar convertible to gold. This Nixon shock fundamentally changed global finance forever. Suddenly, currencies weren't backed by anything tangible. It became fiat money, money that has value simply because the government says it does. And for a more modern example, look at Cyprus in 2013. The nation was in a financial crisis. To solve it, they did a bail-in. The government decided that regular people with money in the bank would help pay for the rescue. Anyone with more than 100,000 euros in a Cypriot bank lost up to 60% of their savings above that. Amount 60%? Gone. Not borrowed, not frozen, taken. It was called a depositor haircut. But let's call it what it was. Government-sanctioned confiscation. Greece, Argentina, Zimbabwe, the list goes on. In every case, the people holding cash were the ones who got hurt the most. Their savings evaporated. Their purchasing power vanished. And here, the pattern that should concern everyone. These resets almost always happen during periods of massive debt, economic instability, and a loss of confidence in the currency. All right, let's talk about what's happening right now, because the warning signs for the global economy are flashing like crazy. It's like the dashboard of a car that's about to completely break down. Global debt has skyrocketed to absolutely insane levels. We're talking $307 trillion. That's all the debt in the world combined, government, corporate, and household. To give you some perspective, that's more than 3.5 times the entire global economy. The United States alone has a national debt over $34 trillion. That number is so huge our brains can barely process it. But here's what really matters. The interest payments on that debt are now eating up a massive chunk of the federal budget. We're borrowing new money just to pay the interest on the money we've already borrowed. This is what financial experts call a debt spiral. So, how do we get out of this? There are really only a few options. Option 1 is strong economic growth. If the economy grows fast enough, you can eventually outgrow the debt. But with aging populations and slower productivity, that seems pretty unlikely. Option 2 is austerity. That means cutting government spending and raising taxes. But politically, that's incredibly difficult. Which politician is going to get re-elected by telling voters they're cutting essential services? Option 3 is to default, just refuse to pay the debts. But that would completely destroy a country's credit rating and make it impossible to borrow in the future. And then there's option 4. The one governments throughout history have chosen time and time again: inflate your way out of debt. Here's how that works. If you owe $1 million, that's a big problem. But if you print so much money that inflation goes through the roof, suddenly that $1 million is worth a lot less in real terms. You technically pay back what you owe, but you do it with devalued currency. It's a hidden tax. A quiet transfer of wealth from savers to debtors. Governments are the biggest debtors of them all. We've already seen this in action. During the pandemic, central banks around the world printed money at a pace we've never seen in human history. Trillions of dollars, euros, and pounds were created out of thin air. They called it quantitative easing and emergency liquidity, but the result was predictable: massive inflation. In 2022, inflation in the US hit 9%, the highest in 40 years. The prices for food, gas, housing, everything skyrocketed. And while inflation has cooled off a bit, those prices haven't come back down. That wealth is just gone, transferred away from anyone holding cash. Some economists believe we're entering a period of financial restructuring, the likes of which we haven't seen since the end of World War II. They point to the Bretton Woods Agreement in 1944, which made the US dollar the world's reserve currency. That system lasted about 30 years. We're now over 50 years into our current system, and the cracks are showing everywhere. So what would a modern currency reset actually look like? Let's explore a few scenarios experts are quietly discussing. First, the digital currency revolution. Central banks all over the world are developing their own digital currencies, or CBDCs. China already has a digital yuan in use. The EU is testing a digital euro, and the US is researching a digital dollar. On the surface, it sounds convenient: instant payments. No need for physical cash. But here's the catch. A CBDC would give governments unprecedented control over your money. They could see every transaction you make. They could freeze your account instantly. They could even program money with expiration dates to force you to spend it. Imagine a reset where cash is phased out and your entire bank balance is converted to a digital currency, fully transparent and controllable by the government. The second scenario is a new Bretton Woods moment. World leaders could meet and negotiate a new global financial system. Just like in 1944, maybe gold comes back into play. Maybe a basket of different currencies replaces the dollar as the world standard. In this scenario, debts could be restructured and currencies revalued. If you're holding assets in the wrong currency, you could lose a lot. The third scenario, and perhaps the most likely, is the slow bleed. This isn't a dramatic overnight reset, but a gradual erosion of your purchasing power through years of sustained inflation. Governments keep printing money, debt keeps growing, and your savings steadily lose value. It's like the frog in boiling water. The heat is turned up so slowly that you do unnotice until it's too late. This might be what we're experiencing right now. And finally, the fourth scenario, the crisis reset. This is the nightmare scenario. A major bank failure, a government debt default, or a geopolitical crisis triggers a total loss of confidence in the financial system. We saw a preview of this in 2023 with the collapse of Silicon Valley Bank. The government had to step in with emergency guarantees. But what if the next crisis is bigger? What if multiple major banks fail at once? In that scenario, governments could implement capital controls, limiting how much money you can withdraw. Your bank account could get a haircut to save failing banks. They might even issue a whole new currency, converting your old money at whatever rate they decide. All right, so if you're feeling a bit anxious right now, you're not alone. Let's talk about practical steps you can take. Because knowledge without action is just more anxiety. First up, diversification is your best friend. Seriously, don't keep all your money in one place. Spread it across different banks, maybe different currencies if that's an option for you, and definitely different types of assets. That old saying, don't put all your eggs in one basket, exists for a very good reason. Second, understand the difference between money and wealth. Money is just a tool we use to exchange things. Real wealth is your skills, your knowledge, your relationships, your health, and tangible assets that hold value. In every single currency crisis throughout history, the people who had productive skills and real assets always weathered the storm better than those just holding cash. Third, think about hard assets. Now, this doesn't mean you should go panic buy a bunch of gold bars tomorrow, but it makes sense to have some portion of your wealth in assets that could and just be printed into oblivion. Things like real estate, precious metals, even certain collectibles. These have held their value through currency resets for centuries. Fourth, stay informed, but don't panic. The financial media makes its money from fear. Every week there's a new crisis, a new reason to worry. The key is to stay educated and understand the risks, but not to make emotional decisions. Panic selling and panic buying almost always hurt you more than they help. Fifth, keep some cash on hand. If there's a banking crisis, ATMs might not work. Digital payment systems could go down. Having some physical cash for emergencies is just common sense. I'm not talking about your life savings under the mattress, but enough to handle a few weeks of essential expenses. Sixth, reduce your debt where you can. Now, in times of high inflation, debt can sometimes be an advantage, but that's really only if you have a rock-solid, stable income. For most of us, reducing debt just gives us more flexibility and a whole lot of peace of mind. And finally, the most important one, invest in yourself. Your ability to create value, solve problems, and adapt to change is the single most valuable asset you will ever have. In every economic crisis, some people don't just survive, they thrive. They're usually the ones who have skills people need and the creativity to spot new opportunities. So, will banks steal your money? Is a currency reset coming? Here's the honest answer. Nobody knows for certain. Anyone who tells you they know exactly what's going to happen is either lying or trying to sell you something. But what we do know is that the current financial system is under a huge amount of stress. Debt levels are at historic highs. Central banks have kind of painted themselves into a corner. And history shows us that major restructurings happen more often than we'd like to admit. Now, the word steal might be a bit harsh. Governments don't see it as theft. They see it as a necessary policy. They'll call it monetary reform, currency stabilization, or economic restructuring. But from the perspective of someone who sees their life savings losing value overnight, that distinction might not matter much. The good news? You're not powerless. Just by understanding how the system works, you already have an advantage. Most people never even think about these things until it's way too late. By educating yourself, diversifying your assets, and preparing for different scenarios, you're already ahead of the game. Remember what happened in Cyprus when people thought their money was completely safe in the bank? Remember that throughout history, people who suffered the most in financial crises were the ones who refused to believe it could happen to them. But also remember, humanity has survived countless financial resets. Markets collapse, and they rebuild. New systems emerge from the ashes of old ones, and life goes on. The question isn't whether change is coming. Change is always coming. The real question is, will you be ready for it? Don't let this information paralyze you with fear. Let it motivate you to take control of your financial future. Start small. Educate yourself. Make small, steady changes. Build resilience into your financial life. Because at the end of the day, the best protection against any financial crisis isn't gold or crypto or some magic investment. It's being someone who can adapt, create value, and thrive no matter what system we're using. If you found this video eye-opening, hit that subscribe button. We dive deep into topics that others won't touch. And drop a comment below. Do you think a currency reset is coming? What are you doing to prepare? I read every single comment, and I'd love to hear your perspective. Till next time, stay curious, stay informed, and most importantly, stay in control.